Welcome back. You're watching The Money Show, and it's time to get our viewers connected and answer their mutual fund portfolio queries. I have Shweta Rajani from Anand Rathi Wealth answering all the questions for our viewers today. And Shweta, welcome back. And let's take our first viewer's query, and that is Shashi. Shashi says that he's 62 years old, having retired 2 years back. He's been investing in mutual funds since 2006, and the goal is wealth creation and to live a dignified life post-retirement. Now, the entire retirement corpus is invested in equity and debt funds of mutual fund. The ratio over here that he mentioned is 70:30 for long term. And he wants your expert advice to understand if he can continue in the funds that he's mentioned. I think you have the detail of his funds. All right, so he's retired. We don't have him on the phone line, so a lot of questions that you might be wanting to ask him, it's not possible. We just have limited data and details. So, yeah, what about the fund mix? And do you think he needs to reduce his equity exposure furthermore?
Sure. So, Shashi, in case you're, I'm sure, listening to the response, I want to say that some things that you've done very well is, you've planned your retirement very well because you've been investing since 2006. So, that's a tick mark. Plus, your asset allocation is right. I would say a 70-30 combination is a good combination even at this age. Anywhere between 60 to 70 is what I would have recommended in equity. So you're there. These are all the ticks. I'm just going to jump in, therefore, to the schemes that you've mentioned. You have two large caps. I think one large cap is sufficient enough for your portfolio, so you can continue with the Canada Blue Chip Fund. Mirai, of course, is given the two, Canada has a size advantage as well, and they're both very similar in their style. So they continue with Canada, you can stop Mirai. The ELSS schemes you can continue with them because they'll have a 3-year lock-in. And some of the schemes like a Mirai ELSS is also good, so you can continue post that too. The PGIM Midcap is a fund that I would say you can stop your investments into. You can, instead of these two schemes that you're exiting, have more of differentiated styles in the portfolio and little of maybe a small cap exposure up to a 20% is good enough to have. So a few schemes that I am suggesting, you can go in for a Quant Value Fund, an HDFC Flexi Cap Fund. You can also go in for an Invesco small cap and an SBI large and mid. So you can have 3 or 4 funds picked up from the funds that I just mentioned.
Shweta, we have more queries for you, but then it's just the time today that we have, which is over for this part of the show. But thank you so much for being with us today and helping with our viewers with their insurance as well as mutual fund portfolio. On that note, it's a sign off on The Money Show as well. And I'm going to leave you with our WhatsApp number and email ID where we keep answering your questions live on the show. You can send across even insurance related queries on our WhatsApp number, which is 8657974571, and the email ID is themoneyshow@ET Now. Thank you so much for watching. Goodbye.